Okay, we are good. Well, good evening, good afternoon, good morning, everyone, depending where you are. This is Danny calling, from California. We do this session of um, um, talking about real estate every week on Friday at 11 a.m. Pacific time, California time. You are most welcome to join us, of course, at any of those dates. And every week I bring a topic related to investing that I'm going to share with you. But the whole purpose here is to actually get you, engaged. Come with questions related to the topic, not related to the topic. The whole purpose is really to create an education and engagement. So your likes, your hearts, your everything is appreciated. Thank you very much. And let's get started with today's topic, which we're going to talk about the most common questions investors ask. So let me just say, before we start with the topic, I just want to make a short announcement. For those of you who live physically in Southern California, we're holding a class on Wednesday. That's in 4 or 5 days, next week, the 20th of February. And in this class, we're going to talk about real estate investing. I'm going to be teaching different aspects of real estate investing. You are most welcome to join us if you are in Southern California. This is an actual in-the-room event and not online. Anytime we attempt to broadcast those events, that turns out to be very challenging. And we start at 7 p.m. and it's free if you pre-register. There is a door fee if you show up the day of the event. With that said, we also have a session before at 6:15. We call it the power session, which is more of an opportunity for investors to engage and ask questions related to real estate investing that are not necessarily related to the topic. So if you're around next week, February the 20th, 2019, 7 p.m. we start with the class, 6:15 we start with the power session. You can join both. You can join just the class if you want. I'm going to put the link right now to register, which is simply doit.net/OC Feb 2019. Simply doit.net/OC Feb 2019. And I am stating it because we are recording it in few channels. We have the Facebook Live, we have the YouTube Live, and we have the podcast right here as well. So with that said, let's start with today's topic, which is most asked questions answered. And let me just say this. When we work with investors, before we even start an official or a conversation or a one-on-one session, intimate conversation between us and an individual investor or a couple, we ask you, before we speak, to complete an intake form. A pre-meeting intake form. The intake takes 2-3 minutes. It's nothing too personal. It's more of a prep. It's a prep for us to get to know you a little bit better before the session. And it's a prep for you to answer some questions. And what we found that when people do that, it actually gets you thinking about investing and kind of gets your mind rolling in the right direction. Some of them are more of an open question, not too much, just to get things, make sure we're on the same page. And we have, well over 1,000 lines in this intake. I have done sessions like this. I have done one-on-one, we call it strategy session with investors, well over 7,500 sessions. 7,500, I think it's even getting closer to 10,000 by now, since 2004. So there were days in my career that I would do sessions like this one from 8 in the morning until 5 p.m. or 6 p.m. back to back. Every 30 minutes or every 45 minutes back to back. And we only started collecting the intake a few years ago. We had a previous intake, and we probably lost that. And we analyzed it. We analyzed the intake, and we found out we wanted to see what people are asking for. What is the most asked questions by investors? Like, what's the number one, and altogether, what are the most common one? And that's how we figure out how many people are, what they're, the top of their list. Of course, there are many questions, but we're going to start with the top 7, not necessarily in the right order. So question number one, and again, before I proceed, feel free to comment, feel free to ask questions while I speak. So this is a session for you. I want to share that information with you. Of course, press likes and hearts and etc. And I recognize a few of the names that are joining us, so I really appreciate it. A few of the names I know just by joining online, and a few of the names, I have a friend here or two friends here that I know, in person as well. So by all means, please contribute to the conversation. I think that would be terrific, and I appreciate that. Let's not make it a one-sided conversation. Thank you. All right. Number one, I want to talk about cash flow for a second. Many times when we purchase properties with a mortgage, the cash flow that we receive from the property after everything, when you factor in vacancy, repairs, insurance, property taxes, repairs, maybe HOA, management fee, leasing fee, all of those real life expenses, you end up seeing that in the first few years of the investment, your cash flow is going to be, and of course mortgage payments, it's going to be $100, $200, realistically maybe $300 a month, realistically on average after real life expenses. Okay, now sometimes even investors who are actively investing call me up and say, why am I doing this? What's the point? I mean, I don't really need $200 in cash flow in my life. I have my salary, and even if I have 2 or 3 properties and they're generating $600 now, right, in my life, what's the point? I mean, $600, it's nice. I'm not going to say no, but all the trouble, all the hustle, all of this for what? For 3 properties with $600 a month? What am I missing here? And it's interesting that I see it from beginners, and I also see it from people who actually invested and kind of lost the track, or lost the focus, and they're asking themselves, they're doubting themselves. Well, let me tell you this: you can definitely invest in certain type of real estate that will generate a significant cash flow. First of all, if you buy without a mortgage, obviously that will help, right? Also, if you can go and buy really cheap properties for $30,000, $40,000, $50,000, or so in typically not in good areas. And typically those will be cash deals, and the rent is relatively high on the investment amount, right? On paper. Many times the actual rent is not necessarily as high, but in paper. So when we're talking about nice houses in the suburbs of different US metros such as Nashville and Dallas and Houston and and others, alike, and we're talking about really nice house in a nice community, in the middle class, type of neighborhood, upper middle class, middle class, lower middle class, good schools. This property is not going to be a cash cow. Now, it's not going to be a cash cow to begin with. It's not going to be a cash cow when you have a mortgage. But when you look at the bigger picture and you say, okay, when you buy this property and after all expenses, let's just say it's generating in the first 2 years $200 a month in cash flow on average. Okay. Obviously, we're not going to do it for $200, in cash flow. That it's not, it's nice, but it's not worth the trouble. But when you look at the total investment, you say, okay, this property is slowly appreciating over time, right? It may still do a little bit of up and down over time, but let's just say it even appreciates at the rate of inflation of 4% per year, right? 4% a year on average. Okay, it could be more, could be less, but let's just say I'm not keeping it simple. You will see that your initial investment, how much you put in to buy the property, not including the mortgage, is actually quite significantly higher return, right? So your 4% on a total property is equal to maybe 8 or more percent on your 6 or 8% on your total actual investment. So that's number one. Remember, there is leverage here, and the asset is appreciating in 4%, but your total, your actual funds are appreciating much better. Okay, that's one. Second, rents do tend to go up over time slowly. Rents don't tend to creep up on a 5 or the 2, 3, 4, 5% every year. They creep up, and all of a sudden by year 3, your cash flow is 250. And by year 7, it's 350, right? So slowly you will see that the cash flow is increasing over time, right? It's not a guarantee, but that's if you look at the history, that's usually what happens. So your cash flow increases over time. Okay, so all of a sudden you start at 200 and you go up a little, over time. And third, look about the long term, right? What this property will do for your financial being in 10 years, 15 years, right? Maybe or more. You will see that between the small appreciation, all right, and a little bit of a cash flow that accumulates, and the fact that your cash flow is after mortgage payments, and I am talking about the scenario that you buy with the mortgage, then with the mortgage payments include principal payment. So slowly the loan, the borrowed money goes down, right? So all of a sudden you build equity from appreciation, and you build equity from paying down the mortgage principal, and you build cash flow, generating cash flow. All of that combined is really going to impact your financial being in the future. It's just a very slow mechanism to wealth. So if you're focused on the $200 and you say, what the heck, then you're missing the bigger picture, right? I'm not saying there are there are definitely other ways to make money faster, shorter term, etc. But this is a very relatively slow, consistent, even if it has ups and downs, to a slow mechanism to wealth. So the cash flow, remember, it's not about the actual cash flow that comes with it. It's more about what the entire investment will do for you. Okay, that's number one. Number two, should you buy locally or out of state? Okay, so my answer for this is, where do you live? If you live in Nashville, then I would say by all means go and buy in Nashville locally. If you live like me in California, very close to the coastline, and an average house here probably costs about 1.5 mil, and that's not even something too fancy. Maybe I can find something for 750, which I will go to a different area, or 600, and I can rent a $600,000 house for 2,000, right? Maybe 2,500. So that's for me a really not attractive investment, right? I want to be able to, if I could go out here and buy a 600,000 in a good area, doesn't have to be too fancy, $600,000 home, and rent it for 5,000 plus, then it would make more sense to me. I would want to be even better than that, but that would be a start. Okay, so it really depends where you live. What's your alternative? I would rather go to areas that can stretch, or I can leverage as an investment, not as a mortgage, investment my hard-earned money into other, into doing a much better returns. That's the whole point, right? I have been doing this for 15 years. I started when my first investment when I was living in Tel Aviv, Israel, purchased in outside Phoenix, Arizona in 2002. That was a much better, at the time, return than the alternative, right? Then I moved to California. And in California, the numbers were horrible, right? Very horrible, to say the least. So I wanted to explore where I can invest in different parts of the country where the rent relatively to the purchase price is higher. And that's the basic of this, okay? So simple answer is, can you do well locally? Go for it. If you are in an area that it's super expensive to begin with, right? The $600,000 may not be something that achievable or doable for a lot of us. Or even if you can, the numbers are just so off. Why would you want to do that? So going out of state makes perfect sense, right? For that reason. So it really depends where you are, where you live, and what's the alternative, right? If you live in an area that maybe by going to Nashville you can do you can do a little bit better than by investing locally, maybe save the trouble and buy locally. But if the difference, I can tell you from my experience from California, the rents that I'm getting for the same investment amount is probably 2 to 3 times better, more rent versus the local property in California. So second point, local versus out of state. I think that's a really a question you should be asking based on your alternative. Now, if we're talking about out-of-state properties, one of the most asked questions is, do I need to travel, right? Do I need to travel to see, to check? Well, I want to divide it into two parts. I want to say my simple and most forward answer about this, yes. You don't have to, but I think it's excellent if you do. I think it will help your confidence, your feeling okay and feeling better, especially if you're starting out. So the simple answer is, even if you have to travel, internationally, I think it's a good start to go and travel and see what you're buying before you're buying or while you're under contract. I think it will help. Mostly it will help you, because when you're having a rental property and that property closed a week ago, a month and a half ago, and it's still sitting vacant, you will be nervous, especially if you're a beginner. You will be nervous, and you start doubting yourself. And you start asking yourself, is someone, cheating me? Is someone not telling me everything? What have I done, right? The fact that it can take a property to get rented a month, 3 weeks, a month and a half, even longer sometimes, right? We're not gonna even remember the logic of that, the sanity of that. We're gonna be very pressured. I have learned over the years that for every little problem that there exists with a property, for every 1,000 miles of distance, the problem multiplied by, it sounds 10 times worse. So for example, when we hear a leak in the kitchen sink reported by the property manager, by the time the information reaches us 1,000 miles away, then we only hear a flood. We hear that the house was flooded. I've been doing it long enough to know that's how it works. So when you're traveling, you're not gonna learn the area or the market or the metro within 1, 2, 3, even a week of staying there. But you're gonna get a sense. You're gonna get a sense of what's the area is like, who are the people I'm working with, what type of properties. It will help feed you as an investor. It will help feed you make you a better investor, feel more comfortable about the decision about investing. Not to mention that would probably even make you, if you go there and say, you know what, that's actually not for me to go and invest there, then that's a good thing as well. So traveling, not a must, but definitely something I suggest doing. I can tell you that in Simply Do It, our network, 85% of our investors buy sight unseen. No matter if they get the same answer I just gave you, they still buy sight unseen. Only 15% travel before or while they're buying, a rental property. So I think it's important, good to have. And I'll take it one step further. When you own real estate, do you need to travel when you own? The chances of you needing to travel to solve a problem are practically zero. That may happen, but I can tell you that pretty much everything can be done from a distance. Whether you're working with a property manager, absolutely makes it even easier, or not, then you can definitely do that, from a distance. So you should not be expecting to travel even when you own, unless you feel it's better, unless you want to, of course, and there are also tax consequences to that. Number 4, property managers. Always the issue, property managers. Well, let's just start by saying that the biggest misconception with property managers is that they're all liars, crooks, and cheaters, right? That's what everybody thinks immediately. Well, they're not, okay? Not all of them. I'm sure there are plenty of, bad fish out there, but they're not all crooks and they're not all bad people. It just needs some time and attention and energy to find the good ones. And I can tell you very clearly, every property manager, first of all, you got to understand property managers are always going to be between the rock and the hard place. They're always on the defensive because there's either a problem with the property, a problem with the tenant, right, or a complaint from you, right? And many property managers are not the great communicators, because a lot of them actually are out in the field and they're not sitting down in an office, in front of a PC. So remember that. Now, couple of things about that. Are there good, reliable property managers? Absolutely. I have been doing it for 15 years. I found Many of them, and I'm still working with many of them. Are they perfect? None of them are, right? We're dealing with humans, and humans makes mistakes, and those mistakes, even good intentions not always resulting in the desirable outcome, or sometimes they make one decision and you look at it and you are thinking, oh, I would have or I would have done things differently. Okay, so that will happen. This is not like if it would happen. Those miscommunication, discrepancies, misunderstandings, they're going to happen. You can count on it. Now, so the simple answer is, can you trust them? Absolutely. If can you trust all of them? No. You need to vet, you need to check, you need to make sure you're finding the right people, and you need to make sure you're also supervising them or checking on them to let them know you are not just a passive investor, you are an involved. Doesn't mean you need to call them on a weekly basis or a daily basis to bug them? Probably not, right? Do you need to check up on them? I think so. I call it nudging, and I think it's important to nudge, and the frequency of nudging really depends on the situation. The house is vacant is one situation, a repair is another situation, and so on and so forth. So the simple answer is there are good, hard-working property managers out there that really care and want to please their clients, their owners, right? Even those good ones is not always going. It's not going to be perfect. They're going to make mistakes, and they're going to, even when they bring in all full intentions. So remember that. And I think your job as an owner is not necessarily to come down strongly or criticize ruthlessly your property manager, but actually try to make them succeed. Help them succeed. If you help them to succeed, right, and you kind of push them or encourage them or motivate them in the right direction, and that's exactly my mindset with property managers, that means they'll take better care of your property. Remember, it's not their property they're managing, it's your property they're managing. Okay, the ultimate responsibility of that asset is not with them, is with you. And if you understand that, you can help them do better for you. Remember that. You can help them remember to do better for you. That's very, very important. So property managers, good ones are available, and and can do a good job. Now, along the same line, next point: how can I make sure when the property manager tells me there is a problem or a repair that it's really happened, right? And they're not just making it up, right? Well, first of all, if there's a trust level with the property manager, that's one thing, no problem. If there is not a full trust level or it's being built, there's a couple of things you can do. One, you can actually contact the property, the tenant, if you have their details, anonymously, and just do a follow-up kind of, hello, we want to see, if there was a fix this week, and we're doing just a follow-up, and what was the situation, and was it taken care of? So you kind of investigate, in a sneaky way. If that's not enough, you can actually send like an inspector, someone that will go there. It's not that expensive, or someone that just go on your behalf. You're going to pay them, I don't know, $50 to $100, depending on what needs to be done, and they're gonna go there and check. Also, you can ask the property manager to send you some photos of before and after to make sure. Okay, so those things can help you. If you're really nervous and if you don't trust your property manager, that's a sign right there to replace them. But if you want to kind of do a secret shopper or to follow up on them, you can send someone over and they will go and take some photos and just make sure everything is done. So you can follow up even from a distance to actually confirm that the specific thing was done. Okay. Next question, probably one of the most asked questions, is: do you need an LLC, an entity, to buy real estate? Well, it's a wide, question. It's a comprehensive. Every time we talk about entities and LLCs, for me, it feels like we're opening a door to a corridor of options. So let me start by a disclaimer. I am not an attorney. I cannot give you legal advice, obviously, and I don't always know the specific situation. But generally speaking, an LLC, the way I see it from an experienced investor, is this: when you buy with a conventional mortgage, The bank doesn't want to lend money to an LLC, they want to lend money to an individual. And if you buy a property and thinking of converting, or transferring the title from your name to an LLC after purchase, which something that can be done, just so you know, there are consequences to doing something like this, such as breach of contract with the lender, with the mortgage company, and other consequences on the title. So don't just go ahead and do that. There are significant consequences you need to be aware. That's the two things you need to know. Now, for me, the answer of an LLC is really depending on what you're doing, what's your investment. If you're buying cash and you have no plans of refinancing the property, I would say entity or LLC makes sense, right? If you're buying with a mortgage, then probably LLC would be more difficult to do. Can be done, tricky like I said, but can be done. If you're buying to flip, then you're probably going to do it with an entity or LLC as well. So the simple answer is, I would say it's not a yes and no answer. It's more of a situation-based answer. Cash versus mortgage, flipping versus rentals, middle-class rentals areas like I like to do versus lower-end rentals, cheap, not so good properties in not so good areas. Those are all commercial versus residential. Those are all questions that you should be asking or considering to make that determination, should you use an entity or not. So it's not a yes, it's not a no. A lot of times I hear people ask me this question about LLC, and mostly they are just following someone else's advice or heard someone else speak and talk about it, and they're just copy pasting the answer. So by all means, I would say make it your own situation, and it's really something you need to. The answer should be driven from what you're trying to accomplish, and best would be to talk to an attorney or someone on the legal side. And remember, when you go to talk to an attorney, most likely the answer is always going to be yes. A, because that means more money for them for a service, and B, they're always approaching this from the safety aspect, not necessarily the trenches or the real life, but the safety aspect. And let me give you a little story about that. I'm using a legal advice service for probably 7 years or more. It's something that I pay monthly subscription, and I call an attorney even if I have one question or I need to review a document or all of that. And I really like this service because I can call seeking an advice pretty much on any aspect of legal in any state. For example, I had a problem with a neighbor in one house in Florida that he claimed that he wanted something from me. Attorney in Florida, no problem. I had something regarding a title issue and transferring title question in Indianapolis. I called, no problem, right? So even had something to do in California regarding to a traffic ticket. Called an attorney in California regarding traffic, not even related to real estate. Wheels, all of those things, right? One time I talked to maybe 7 years ago, I call and I get this answer from this guy. I remember his name very, very clearly. I'm not going to say that, of course. An attorney from the service. And I'm asking something very, very specific about related to buying properties at the auction, right? At the auction. And the guy without, this already been through, I've already purchased multiple properties at the auction. And this guy start criticizing me. What are you doing? And you can't do that. And it's not okay. And instead of being my attorney who tells me, don't tell me no, tell me how, right? Or protect my interest, but don't tell me no. He was going on and on and on. And from this day on, actually it was the second or third time I spoke to this guy, and I always hated his answers and I always hated his attitude. And I said, not interested. So remember, and switch to other ones. Remember, not to just follow the attorney. Come with the questions that you want answered. Come with things that you care about, so you can actually get more of the session with the attorney or the legal advice. Enough said about that. So we just covered the 6th point, which is, do you need an LLC? And by the way, I have a whole episode online on to LLC or not LLC, diving into it really in the nitty gritty. It's online, you can check it out. Instead of just giving you a brief answer, I really dive into that topic, quite heavily. Last question for the day. Last question for the day is drums. Okay, when we analyzed our intake with well over 1,000 answers, right? Well over 1,000 answers. The number one asked question by far was, how do I get started? And I gotta tell you, when we did this analysis, I was surprised. I thought it's very clear, right? We tried to make it very clear. Apparently not. So, how do you get started? Let me just give you a couple of things, couple of pointers here. Before you jump in and start following the herd, ask yourself a few questions. How much money do I have? Am I going to buy with a mortgage? Do I want to be more passive or more active? Can I do it by myself, or do I need help? Some guidance, okay? What's my experience level? And then more specifically about the property, what am I looking to buy? Am I looking to buy a 1-bedroom, 1-bathroom, a 2-bedrooms, 2 bathrooms, a 3-2, whatever? Try to describe that property. What is it you want to buy? How much square foot, what size, what age of a house, how much money, how much rent, what kind of ROI you're looking for, right? Even if you don't have all the answers, outline 5, 10, 15 questions you want to get answers, not necessarily about the property itself, but more to give you a broader inner look, what you're trying to do, what you're trying to accomplish, what is a good fit for you. Because if you answer that you don't have time, you don't have experience, and you want to be hands off, then you should go in a route that it's more of a passive investing, such as joining a group or a syndication or something like that. And if you're saying, no, I actually have to be involved and I want to be hands on, then you may want to be not just buying a rental property using a property manager. You may want to buy a rental property with, locally, that you can actually feel and touch and deal with it, right? If you're a control freak. If you're anywhere in between, find that niche for you, right? So ask that before you start following the herd in a certain direction, okay? And then you will be able to better steer your way in this environment. Now, simply put, how much money, right? What do you need? You need funds. If you're using a mortgage, qualify for a mortgage, you need to find the market or the metro or, and the people that will help you buy. Submit an offer and purchase. It's that simple, right? It's that simple. Obviously, a lot of us get distracted or or kind of lose focus in the process because it's overwhelming of many little details. The way we set it up is actually very easy. We tell the investors, contact us. We're going to ask you to complete the intake form. Once you complete the intake form, we're going to set up a time for us to speak in an intimate environment, all right? Not something that will, with other people around, just an intimate environment where we can talk about your objections, your questions, concerns, and so on. And actually, in the conversation, we call it the strategy session. And in this session, we actually try to answer those questions I just told you to make sure this is a good fit between what you're trying to accomplish and what we're able to do. So if you come to us and say, listen, I want to buy, 100-unit multifamily, for whatever millions of dollars, I'm going to tell you this is not a good fit, right? It's not what we do, right? Sometimes people come and say, we want to work with you as wholesalers. Again, not a good fit. It's not what we do. But if you're distracted, you're not sure, you have money, but you're not sure, should I go to Nashville? Should I buy a rental property? Should I buy for this amount? Should I use a mortgage? That's where we come and say, okay, let's clarify those things and try to put you in the right direction, okay? So how do you get started with us? Very simple. You just go and complete our intake form, which I'm gonna put a link to it. And we ask you a few questions, not too much, not to bug you too much. And then we set up a time. And we set up a time and talk. We talk about you, we talk about your needs, your concerns, etc. And we see if they're a good fit, and then we'll take it from there. No string attached, no sales pitch in the session. Usually 30 to 40 minutes usually is okay. We do it by phone. We do it in person if you're local in Southern California. We do it obviously Zoom, Skype, whatever. I don't care. The important thing is for us to have a session that we can communicate properly. We do it with people who live outside of the United States. We do it with people who live in different parts of the country. It's all good, no problem. And then we actually try and reveal the answers or clarify those answers for you and possibly tell you how to move forward from that point on. So you're most welcome to join us, meet with me one-on-one virtually or one-on-one in person to move to the next step, which is how to really get started. If you want to do that, press the link, complete the form. Kenny, my awesome assistant, will contact you and set up a time. If you are just want to have a quick conversation with me or just 2 minutes, no problem. Jump on a quick call or a quick chat. That's okay too. Not a problem. You know how to contact me. And with that said, if you have any questions or comments or feedback, that will be a great time to put them on the post, on the comments, of course. And while you're doing that, I'm just going to say that for those who joined a little bit later, if you scroll up to the comments, you will see that for those who are either live in Southern California or are traveling to Southern California, the coming Wednesday, we're going to have a class on real estate investing. Shockingly, I know, surprise. You're most welcome to join that class in person, in the room, in Irvine. On Wednesday, the 20th of February, we have a session. We have the class starts at 7. At 6:15, we actually get together and we do an open forum for questions. We call it the power session, just a Q&A with the crowd, with the audience, for the audience. Whatever questions you want to bring about real estate investing. The whole purpose is not just for me to provide information, but actually people from the audience can contribute their own experience. That's coming up. It's free if you pre-register. Is $15 to $25 door fee depending on which session you are joining. I hope to see you there. It's not going to be broadcasted online, at least not that we are planning on. And if there are any questions, by all means, let's get them now. And if not, we're going to be wrapping up for today. So I'm going to wait for another 45 seconds for your comments, your questions, or anything else. By the way, if you thought this is a good session and you think you're benefiting, please say something. Kindly say something. Be courteous to your host and say, Danny, I liked it. Danny, I like mostly the LLC, whatever. So this way I get some feedback from you. Otherwise, I will just assume you're not here with me. You have the live in front of you, but are watching something else distracted, on Facebook. I'm being quiet because I'm waiting to see if something comes in. I have to say that this format, the one thing I don't like about this format is usually people do not really engage with the conversation. I have two guys that usually do ask questions. I think I saw one of them today here, but maybe he's gone already. By the way, I'm going to say this. For those of you who speak Hebrew, we are just launching today another podcast just in Hebrew. I don't know if you can see that. Just in Hebrew. So we only uploaded, the 2 episodes, but we're bringing up more. I also have my own podcast in English, of course. If you look up on any podcast player, simply do it, Guided Real Estate Investing. You will find us. If you can't find us, ask me, and I'll send you a link to either the one in Hebrew or the one in English. So by all means, you can join. The whole point is really putting information out there so we can engage, we can do business together, and we can educate you on real estate investing. My favorite episode is episode number 1 in the Hebrew one because it talks about me. I introduce myself in more details. You can go ahead and listen. All right, no questions coming in. That's fine by me. I just want to say thank you for joining. Even if you're joining right now, you can watch the recording. It's available here on Facebook. It's available here on YouTube. It's available here on the other podcast in English. You can consume it. Send us comments, send us questions, send us information. And I want to wish all of you happy and great long weekend if you live in the States. Enjoy your long weekend holiday. And thank you, everyone. Have a terrific rest of your day, a terrific weekend. Hope to talk to you in person soon. See you next week here in this session. Bye-bye, everyone. Bye-bye from California. Have a good day. Bye-bye.